After a Trump victory, how certain can investors be? Welcome to Market Insight. I'm David Pollard. Trump wins, leaving investors peering through the dust, kicked up by his victory as they scan for the emerging outlines of tariffs, higher government deficits, inflation, but also possibly lower taxes and less corporate regulation. One such investor is Ross Gerber, President and CEO of Gerber Kawasaki. Welcome, Ross. For an investor like you, where do you start? What is the compass point, if you like, as you peer into the future and try to make sense of what a Trump term will bring?
Well, I think the market's showing us some pretty obvious signs of what the future will bring where you look at in the bond market. So, we've seen a massive sell-off in bonds with higher rates coming across the board, and that's really putting pressure on real estate stocks, for example, and real estate as a whole. So this whole perception that we were really moving into a much slower economic growth period with higher rates sort of weighing on us is now sort of switching into maybe we're going to have policies that pick up economic activity, have a positive yield curve, and we're seeing that also in the financials. So I think investors need to recalibrate where they're thinking rates are going to be for sure, and that's what we're seeing ripple through the markets now.
In your immediate response, how is your Gerber Kawasaki ETF performing on the back of today's news? What short-term trades do you see as lucrative? And will you be making any immediate big changes to your portfolios?
Well, it's funny you brought that up because one of the things we own in our ETF that's performing very well is Bitcoin, and we expect Bitcoin to do extremely well under Trump. So that's a play you get in GK that you don't get in other ETFs. On the other side of the coin, we have some cannabis investments, a small investment, which is getting hammered today because Florida didn't pass their recreational use and Trump isn't perceived as likely to be into legalization. So, you have different sort of winners and losers, green energy, selling off, banks rallying. So for us, we kind of are having a mixed day today because some of the stuff we own is in real estate and that's getting hammered today. So we're having a great day overall, but it could be a little bit better if we didn't have some of the like we own Home Depot, it's getting hammered today. So I don't see this as a huge negative for real estate because actually Trump's a real estate guy. So I expect rates to be lower and he's going to work very hard to get rates lower. But that said, on the short term, it's definitely, rates have moved higher.
And how would you characterize your clients' response? What are you hearing from your clients in terms of what could be the biggest threat to prospects for the US investment community?
Most of my clients, are pretty liberal. So, people are obviously dismayed, but nobody's confused that Trump cares about money and the stock market is a barometer that he uses to value his own success. So I don't think investors should be that worried from the sense of markets and overall policy from an economic perspective. What we're worried about are policy changes like tariffs, which have dramatic potential economic implications that could be quite negative for the United States. And so I caution people to worry about policy changes when there's a big process that has to go through to make these policy changes. So what I think we'll actually see down the line might be vastly different than what all the rhetoric we've seen on the campaign trail, where I think Trump basically told everybody what they wanted to hear no matter what. So what actually will happen and what we've heard, I think, will be a kind of a big differential.
Now, you've already talked about some of the market moves we've seen today after these events, but in the longer term, where do you see investors making big gains if those gains are possible under a Trump administration?
Well, within my portfolio in GK and my personal portfolio, which is mostly GK anyways, but we're very bullish on technology and we always have been. That's always been my thematic sort of main theme as an investor since I was a kid. And I think the AI revolution is early on and there's tremendous opportunities in the core AI players like Microsoft and NVIDIA, which are my top two holdings, and then Apple's number three. So we see that as, sort of this core thematic winner, no matter who's president. And remember, I've been an investor for over 30 years as a professional. It doesn't matter who's president per se. As an investor, you're investing for the long term, and the long term isn't 4 years. It's maybe 20 years, or 10 years, at a minimum. So we're going to see many presidents before many of these investment themes are done playing out. So AI is probably one of the most consequential investment opportunities that we are positioning ourselves for in the next, period of time. And then secondly, we really see with Trump probably a better consumer discretionary market as well. High rates have really weighed down small businesses. It's really weighed on consumers, along with higher inflation. So buying a home, for example, in the United States is the hardest it's ever been in history between the costs and interest rates. So I see rates actually coming down over time and helping consumers. And Trump is going to probably fire Powell and find somebody that will lower rates. So the real question is what will happen with inflation. So, that's going to be a boogeyman one way or another. But I think these are policies that are pro-growth that we're going to see and will ultimately be good for investors. And what we're worried about are geopolitics, not economics. That's where the risk for investors really lies. What happens with China? What happens with Ukraine and Israel? And how these policies take shape, because we sort of are in an economic war with China. And how does this take shape under Trump? And this could cause damage to the global economy. So this is really what I'm saying is don't worry about economics, worry about geopolitics. And that's really what we're watching closely.
Closer to home, though, a subject close to your heart is Elon Musk, boss of Tesla, in which you have held big stakes. Could he be Trump's new efficiency commissioner? If so, what's in it for Musk? And is he playing a canny game, in your view?
Yeah, I mean, I think in hindsight, obviously Musk's takeover of Twitter was a long play to get power, ultimately, which has led him into the White House, which will ultimately lead to him trying to get regulators off Tesla's back. So that's the upside for Tesla. There are a lot of regulatory bodies looking at Tesla for a lot of different reasons. It doesn't help him on the state level, but it helps him on the federal level. I think, the government needs a real big improvement in efficiency. And if Elon Musk is involved with trying to make the government more efficient, I wish him luck, but he'll realize very quickly, as a 250-year-old system, it's real hard to change. So I wish him luck with that. But that said, I want him focused on making full self-driving work. What, the canary in the coal mine at Tesla is that the software doesn't work, and it still doesn't work. And I've been testing it for years, and it's no better than it was a year ago. And it's just different problems with different solutions. So it doesn't matter whether he's working with Trump or not. He's got to get the software to work for Tesla to succeed. And right now we're still not there. So, this doesn't increase his focus on getting the software to work.
Okay, Ross Gerber of Gerber Kawasaki. We'll leave it there. Many thanks for sharing your thoughts with us today. That is Market Insight. We have more videos on Reuters.com.